China's retail sales post a surprise slowdown in November, highlighting the need to boost demand in the world's second largest economy. Well, the new French Prime Minister Francois Bayrou is set to meet the national rally's Marine Le Pen this morning in an effort to form a new government. Plus, Francine Lacqua says the ECB will cut rates further, with the bank's inflation target now in reach. So let's take a look at the European markets map. There's quite a lot going on, actually, but it seems that a lot of these stocks are pretty range-bound. The picture is one, of course, of a little bit of looking forward to, maybe a bit of profit-taking. You can see the CAC 40 down some 0.6%, the DAX and, of course, the FTSE 100 down between 0.3 and 0.2%. It's the last week, actually, of a full trading week before we get onto the holiday, so it could be a bit of tactical allocation, a little bit of profit-taking, and then some of the things, of course, that we watch out for is not only what's happening with the Fed. We have the BOJ, we have the Fed, the Bank of England this week, but euro-dollar 105.10 on the back of what we heard from Christine Lagarde. And then Bitcoin, another record. Again, we start preparing for a Trump trade into that inauguration, January 20th. Bitcoin 104,530. Now, a couple of other PMIs that we're getting. This is actually Euro area December manufacturing, unchanged, 45.2. The December services PMI rising to 51.4. Again, anything above 50 means it's an expansion territory. And then we'll spend quite a lot of time looking at the Chinese data and what that means for extra stimulus for Chinese policymakers. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, France's new Prime Minister, Francois Bayrou, is meeting with far-right leader Marine Le Pen today, kicking off an effort to form a government that can push a budget through a divided parliament. Well, Bloomberg's Alan Katz joins us now with the very latest. He's, of course, our Paris bureau chief. Alan, thank you for joining us. So is Bayrou likely to have more success getting a budget passed than the last guy?
Well, that's the million-dollar question, Francine. I mean, he faces all the same issues and constraints that his predecessor, Michel Barnier, faced. The question is going to be, can he pry away, or at least in some respect, the socialists from the rest of sort of the France Unbowed, sort of from this larger leftist bloc that they'd had before? Can he convince Marine Le Pen, who you have up on the screen right now, to support the government after she helped oust Barnier just 2 weeks ago? It's really unclear. So he's meeting with Le Pen right now. He's meeting with several other political groups later in the day, including the socialists. And he's going to try to start, as you say, seeing what he can do in terms of government formation. But it's really going to take several days at least. There's not going to be any sort of resolution about that today. I certainly wouldn't expect.
So, Alan, what effect will Moody's rating cut have on the psyche, or also how the deficit's put together?
So at least from a market's perspective, the Moody's cut hasn't had really much of an impact at all so far. Things are pretty calm this morning in France. From the perspective of sort of keeping everyone's attention focused on France's deficit and on its fiscal issues, it certainly helps keep that attention on there, because it reminds people that if France has a real problem at the moment, it's that its budget deficit is 6% or above 6%, and it really needs to do something about that. And trying to figure out what to do about that, or how to tackle that, is really the problem. I mean, Marine Le Pen said that when she voted to oust Barnier, in part it's because his budget process was too draconian and it's going to hurt people too much, and that she's for, budget deficit reduction, but in a less dramatic path, perhaps, or less draconian path than Barnier took. And that sort of puts, I guess, some restrictions on what Bayrou might be able to try to propose. But first, he has to form a government, and only then will they really sort of be able to tackle the deficit question.
Yeah, a lot going on ahead, of course, of the holidays, so they don't have also a lot of time. The time limit is essential. Alan, thank you so much. Alan Katz there with the very latest on France. Now, China's retail sales growth unexpectedly weakened last month, highlighting the urgency for Beijing to further encourage residents to spend. Now, for more, let's bring in Bloomberg's China EcoGov editor, Alan Wong. Alan, so what stood out for you in the data?
Yeah, 3% growth wasn't bad compared to earlier this year, but compared to the previous month in October, it was a major disappointment. In fact, it was lower than all economist estimates that we have. It doesn't bode well for China's program to stimulate consumption using a cash for clunkers program that subsidizes people's purchases of home appliances and cars. It showed that those stimulus measures have had a somewhat short-lived effect, and that China will need to do more to really get people spending again. Another data point that jumped out was that industrial production kept its momentum. So that part of the picture is looking decent for China. But an important asterisk here is that some of the industrial production growth came from companies placing their orders early to front-load their shipments just to avoid expected tariffs from the incoming Trump administration.
So, Alan, what can regulators do?
The policymakers, they are aware of the need to improve domestic consumption because, well, exports may get hit by the tariffs. So last week, policymakers, they vowed to forcefully stimulate domestic demand. That's a vow that communicated in language that we haven't seen in, we've only seen twice in the last decade or so. So that sent the markets a signal that Beijing is very much intent on doing that. But in terms of what it can really do, we're expecting them to carry out monetary loosening and some greater fiscal spending. We're expecting more details of the policy announcements in the coming months.
Alan, thank you so much. Bloomberg's China EcoGov editor, Alan Wong. Now, to talk about the markets, we're joined by Ozan Tarman, Vice Chair of Global Macro at Deutsche Bank. Ozan, thank you so much for joining us. As always, there's a lot going on. I mean, between Germany that votes, there's France, there's China, there's the Trump tariffs. What's your best play right now?
Wonderful to be here. As usual, you called me at game time, European PMIs, Fed time. The key word at the moment is U.S. exceptionalism, something that worked so well for the past 2 years. And all the market calls are for it to continue. But my 3 decades in this industry makes me feel a bit careful when all the outlooks, 2025 outlooks, buy side and sell side actually, almost point the same direction. S&P something around 6,700 to 7,000, US rates somewhere towards 475, and euro dollar parity or worse. Maybe it's going to play out that way, but I think we may have some orange signs going forward.
But Ozan, are you saying that something is mispriced or that everything's priced to perfection, therefore there's not much upside going up?
A bit more the latter. Okay. We're all going through the same, and because math makes sense, especially on the European.
Some.
To some, actually, and to some more, to US more. I think that's the problem, right? If anything, my team was one of the first forthcoming, George Saravelos and team on the FX front. Scholz, Jared on the rates front. Europe does need to cut more, math-wise and growth-wise, despite the PMIs that we just saw. And Mr. Powell, after doing another 25 in 3 days, we can discuss, can take a while to make the next move. Maybe he's going to pause. So because of that, maybe we shall move towards parity. But in some of my roundtables, wherever I go, London, Europe, US, when like 30 out of 30 in a table all vote for parity before 110, watch out.
But Ozan, so what happens actually when the Fed, so I'm assuming that you're expecting a cut from the Fed this week. What happens afterwards, given we don't really know what Trump policy will look like in terms of tariffs and whether that means it's inflationary automatically for the U.S.?
I think first, especially market and U.S. banks will move more towards the hawkish side. At the moment still, market expects something like 54 basis points of cuts. More or less key American banks, 2 to 3 cuts still. I think he was right to cut 100 basis points since September, because at the end of the day, there's a reason why Mr. Trump won. Poor to middle income, some people in America live from paycheck to paycheck. But after this, he can wait and see. First of all, let's see what happens after January 20, what exactly the tariff proposals are, how the deportations play out, and he can take his time. I still think Fed probably wants to cut 1 or 2 times, but we'll have to see how it plays out. And first, the market will come towards our call, which is almost a pause. Dots are very important this Wednesday. We expect still 3 cuts. So they'll go for 75 basis points to 3.65. Terminal rate probably will go up to 3.1.
And that's steady.
And that's steady. But come January, end of January, in the next meeting, he may go even more hawkish than that, depending on how Trump starts on Jan 20.
Yeah, and inflation could also be linked to immigration. What's your take on China? Again, we've had quite a lot of stimulus. We knew that the policymakers in China did it reluctantly because it's not the kind of growth that they want to stimulate. What will happen to consumption?
People love, my dear client fans love to be bearish on China. Again, maybe for a reason. I think China receiving rates trade will continue to work because the main thing that they have that seems to be working for them is to continue to ease rates. At one stage, yes, they will have to let the currency go, depending on where Trump starts the tariffs from. By the way, on that, over the weekend, Politburo article, quite hawkish. Lighthizer may not there, but Greer is. They may start from the top side. Depending on that, maybe 740, 750 that everyone talks about. But first, they may have to let the currency go. Something at the end, she will have to decide.
When you look at French bonds, is there any attractiveness right now?
Wonderful interview last week by Le Pen. That's the key thing. At the moment, look, another thing that we should watch out for in 2025. Some key players are getting very bared up Europe and very bared up France. At the moment, it's pretty calm. At some stage next year, we may have to see whether they really play for that break of 150 in spreads. I don't see that kind of development until summer, until the elections. Yeah. In the elections, I personally predict centrists will do bad, and Madame Le Pen or some successor, maybe depending on March 31st, will do pretty well, and that may have to trigger that bearish trade. For the moment, though, pain trade is for European rates to continue to sell off because everybody expects US rates to sell off much more than European rates. The other way around is the pain trade.
Ozan, thank you so much for joining us. Deutsche Bank's Ozan Tarman there with the very latest on some of his calls. Coming up, we talk European energy security and the impact of France's political turmoil with the chairman of Engie, Jean-Pierre Clamadieu. That's next, and this is Bloomberg. Well, the EU is discussing preparations for the winter with the gas transit agreement between Russia and Ukraine set to expire, and the bloc, of course, trying to phase out reliance on fossil fuels from Moscow. Now, to discuss all of this, Europe's energy outlook, as well as the impact of France's political turmoil, I'm joined exclusively by Jean-Pierre Clamadieu, chairman of the French renewable energy utility Engie. So thank you so much, Mr. Clamadieu, for joining us today. How is the political crisis in France impacting some of your decisions and how you're seen from abroad?
Well, I think we have obviously some uncertainties in front of us, but we have since Friday a new Prime Minister. We hope to have a new government soon. Emergency measure will be taken by the National Assembly to allow the funding of the state early January, but we will need a new budget, and this budget will obviously contain measures which will impact the energy sector. So we are waiting impatiently to see this being put in place.
Do you think it's impacting the business confidence, the uncertainty, and what are you expecting it to either come to an end or actually for a pickup? We also saw some of the rating agencies having concerns about France.
No, yes, I mean, it creates obviously uncertainties, and what we need to be able to make investment decision is a bit more certainties in terms of a framework in which we will operate. So this situation impacts business confidence. I hope again that we will have in the next few weeks more certainties, and that this will allow the business cycle to restart, people make decisions, and make sure that we can indeed continue on the track on which we were operating so far.
With the absence of a budget, is it impacting the energy transition next year?
To some extent, yes. I mean, there are investments which are being done as we speak. So this investment will go to their conclusion. But the budget contained The previous budget contained a number of measures regarding energy taxation, and we need to have an understanding of what will happen to be able to continue the path in which the country and Europe as a whole is going regarding energy transition.
What do you see as the biggest concern for next year regarding the energy transition? Is it politics, especially from the U.S., or is it just that, a lot of chief executives have crises to manage, and so we'll focus less on the energy transition?
Well, I think the key question for companies like Engie who are investing massively in renewable is what's the right mix in terms of geography. So yes, we have question mark in the US, in which Engie is investing massively. The question is, will the IRA continue? And especially when it comes to the measure which have supported the development of renewable. Overall, the signals we are getting today are pretty positive because these measures benefit mostly the red state, and our customers, especially the large, the GAFAs as they are called, are craving for green electron. So there is a market, there is a need for this renewable, and we expect that some continuity regarding the support. In Europe, Green Deal will continue, but Green Deal objectives will continue to be the compass. But we are asking for a number of simplification, more pragmatism in the way these measures are being put in place. The President of the Commission, Mrs. Ursula von der Leyen, has promised that by the end of February, she will put proposals on the table to go in the direction of more pragmatism, which will allow us to continue to invest with confidence in Europe.
Mm-hmm. I mean, is there less interest in investing in renewables with more talk on nuclear that would actually sort out France? And is that dangerous to be going that way?
I think there is a good complementarity between the various low-carbon sources. We need nuclear in countries like France, where nuclear represents already a significant part of the energy mix, but we need renewable. And the mix between nuclear and renewable is very dependent on countries in Europe because the acceptance of nuclear is also very different. If you think of France and Germany, for example, very close to each other, but very different view on nuclear. But for us, we need all low-carbon energy sources to be used to be able to develop an efficient and affordable energy mix in Europe. And on top of that, we need significant investment in infrastructure because to be able to take advantage of these various sources, we need the transmission line, we need the storage facility so that we can have indeed a very efficient and decarbonized energy system in Europe.
But what is the impact of, on prices of energy and deindustrialization? How do you see that? How do you foresee that going in the next 12 to 18 months?
Europe is facing tough challenges. It's obvious when it comes to deindustrialization. When we look at the expected growth, when we look at decisions taken by a number of industrial companies, we see that we face this risk. And energy cost, the cost of access to energy is one element. And again, the energy transition can, in some years, give us more affordable access to energy in Europe. On the gas side of the equation, we've done a lot in the past few years to diversify the access to gas in Europe with an overall cost which is higher than it was before the crisis, but much lower than it was at the heart of the crisis. So this is part, the energy policy is obviously part of what can make Europe a more attractive country to invest.
Mr. Clamadieu, the energy transition, of course, requires a lot of investment in power grids. Power grids operator in Belgium, but also in Germany, are looking to raise capital. Would it make sense for Engie to consider taking a stake in some of these power networks to help them invest?
We are an important player in energy infrastructure. Today, mostly gas, but we are investing in countries like Brazil or Chile in power lines, and we are looking at opportunity to invest in Europe in power infrastructure. For that, we need the right incentive, the right framework, the right regulation. And yes, if the regulations open up opportunity, it's certainly something that Engie think could be part of its strategy.
Jean-Pierre Clamadieu, thank you so much for joining us. That was the chairman, of course, of Engie. Now, we'll have plenty more to come. We'll talk energy. We'll talk about the transition. We'll also talk Ukraine and markets. This is Bloomberg. Welcome back, everyone. It's a big week, actually, the last full week of trading ahead of the holiday season. This is the picture for European indices. But overall, in general, the focus is on a lot of the central banks today. Now, European stocks edging lower, weaker than expected retail print in China really weighing on sentiment. Bitcoin, for example, though, hitting a fresh record high. Now, China's retail sales increased some 3% from a year ago. Again, the increase fell short of forecast for about 5% growth by economists surveyed by Bloomberg. This is what we're looking at in terms of U.S. futures. Again, the focus is firmly on the Fed later on in the week, and look out for any kind of new moves for the Nasdaq futures gaining 0.1%. Also, Bitcoin rising as much as 3.6% at a new record high. Coming up, we'll be discussing support for European security and defense with the European Investment Bank President, Nadia Calvino. This is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. China's retail sales post a surprise slowdown in November, highlighting the need to boost demand in the world's second largest economy. Now, the new French Prime Minister Francois Bayrou is set to meet the National Rally's Marine Le Pen this morning in an effort to form a new government. Plus, Christine Lagarde says the ECB will cut rates further, with the bank's inflation target now in reach. And the European Investment Bank is stepping up to support Europe's security and defense industry, with the bank approving a €1 billion financing package. I'm delighted now to be joined by Nadia Calvino, President of the European Investment Bank. She's been in the role for just under a year. Before that, she was Deputy Prime Minister of Spain. She also served as Spain's Economy and Business Minister. So, Ms. Calvino, thank you so much for joining us. There's been a lot going on, so congratulations. 1 year in the role. I don't know how much you've achieved that you thought was impossible. Was the year just trying to understand what each member state wants and their concerns, or do you feel like you've put targets and priorities in place?
No, I'm extremely satisfied with this first year. It's been very intense. I've traveled to the 27 member states, spoke to the finance ministers, prime ministers, presidents, listened very carefully to them, also our clients outside the EU. And that has allowed us to have a strategic roadmap, which is quite clear. We're already stepping up our support to security and defense, but also stepping up our support to investments which are very close to the hearts of the people, for example, in the area of housing. So I think that's putting the European Investment Bank at the heart of European decision-making and policy-making, and that's where we should be.
On defense projects, can we expect anything new in terms of concrete things coming up in the next 6 to 12 months?
Absolutely. We were quite fast to change our eligibilities. So in May, 1st of May, we already changed our dual-use eligibilities so that we removed a very important constraint that said that more than 50% of future revenues had to come from civil use for something to be considered to be dual-use. So this is opening up the possibility for us to finance border protection, demining, decontamination, space, cybersecurity research, drones, and that, I think, has enlarged significantly the scope of projects in Europe that we will be supporting. We see that activity is picking up, things are changing, and I expect that next year we will be at least doubling our investment in this area.
What about things relating to climate change? Again, we have a new president that will be in the White House. Inauguration is January 20th. We don't exactly know what he'll do with the IRA. Does it make it more difficult for Europe to continue to remain committed to climate change projects?
Not at all, because I think that climate action has entered a new phase, which is much more driven by technology and economic profitability. You know, people are realizing that €1 invested in climate resilience is actually saving 5 to 7 euros in damage repair down the line. So it is not only the right thing to do, it is also the smart thing to do. And that explains why businesses and companies are getting on with it in the EU, in the US. And that, I think, is independent from the political noise that may be surrounding these decisions. In Europe, this will be one of the key challenges and top priorities for the new Commission that's starting to work these days, how to make climate and competitiveness a winning tandem.
But, Ms. Calvino, when it comes to, of course, defense or clean tech, we had the Draghi report that identifies basically a shortfall of 800 billion euros a year. I know you're an optimist by nature, but is there a danger that Europe just falls short of that kind of cash?
I get this question all the time. How are we going to come up the 800 billion? You know? But I think it's more about setting in motion the changes and mobilizing the investments that will drive this change. And what we see in our latest reports and surveys is that more than 60% of European companies are investing in climate action. So that's why I said they're getting on with it. The same way that more than 70% of European companies are digitalizing, are investing in these technological developments to become more efficient. So change is going on, and I would say, again, that it will be decoupled from other political discussions, because we need to tackle climate change. I mean, it is becoming more and more obvious that these extreme climate events are very damaging for economic performance and stability, and so we need to face them, if possible, in a coherent and cooperative manner.
So when it comes to clean tech, you've mentioned defense, you've also mentioned housing. What are some of the new instruments, actually, that the EIB could put in place next year?
Well, we're working on a number of programs, novel programs in the area of housing, also water, how to make climate and competitiveness this winning team and tandem, clean tech, biotech. Europe is a powerhouse when it comes to innovation, health tech, for example. So we want to support these innovative companies and make sure that we contribute to deeper and larger European capital markets that will allow these brilliant companies to grow. We need to ensure that ideas, technologies and companies which are born in the EU can remain and prosper in the EU. They don't need to go to the US to find financing once they reach the 500 million euro financing needs. As we are seeing, you know, the unicorns that then grow in the US, many of them are born in Europe. So we need to preserve that talent and the capabilities and the performance of these companies here in the EU.
With new financial instruments, again, does it, you know, even the defense fund, how does it make more sense for the EIB to have it than the EC? Because you can leverage, I guess, that money in a more sustainable way.
Yeah. There are many ideas going around. I think that we will hear many ideas. We need to see when the new French government is starting to work, also the new German government, and then we will see how things are really landing, you know, in terms of concrete proposals. But what we're doing from the European Investment Bank is we're already working in new instruments that may allow Europe's capital markets to grow, channeling savings into productive investments in the EU. And also, we're stepping up our support to Europe's security and defense industry, which at the end of the day is contributing to peace in Europe and beyond.
So what's your priority for 2025?
Well, we need to deploy this 95 billion euro strategic investment plan that was just approved last week by our board. So we have an ambitious program of investments. I think this capital market union work is going to be a top priority for everybody, and things will move. Tech EU, how to support Europe's tech companies to grow and remain in Europe, and how to make sure that we move to a more productive strategic alliance around the world, you know, starting with the US administration, a new US administration. Only last week we saw how Europe is taking the lead in terms of remaining a trade powerhouse with the agreement with Mercosur. So we will see how to accompany all these top political priorities in Europe with financing. We put the money where our mouth is.
Do you see it as a difficult year coming up ahead, given also some of the tariffs that Donald Trump could put in place exactly at a time where I guess a lot of leaders are asking themselves questions on how to become more competitive in Europe?
I think it will be a year of change. We should really think that the world is changing very fast, and remaining stable and status quo will not be an option. I think we really need to be prepared for some significant changes going on the US side, but also the rest of the world. You know, things are moving on. I see it whenever I go to international gatherings. We see there are emerging powers, there are new strategic alliances being built. And so, as Europeans, I think we have to stick together. It's very cold out there. We need to stick together, see how to deepen our strategic alliances and how to remain competitive and have a strong voice of Europe in the world.
Are leaders ready for it?
I think they are quite determined to do it. They are confronted with many challenges in their daily lives, but we need to absolutely stick together and try to have a cooperative approach, unity, going forward. That I'm very, very convinced of.
Nadia, Calvino, thank you so much for joining us today. And congratulations, 1 year in the job, many more years to come. Nadia Calvino, the president of the European Investment Bank. Now, we're just getting a bit of data out of the UK. December services PMI rising to 51.4. That's a little bit better than expected. A reminder, anything above 50 means it's in expansionary territory. Manufacturing, though, falling to 47.3. And then let's look at sterling. I think it's extending some of the gains after UK PMI is up 126.65. Now, the German Chancellor, Olaf Scholz, faces a confidence vote later today, likely to pave the way for a snap election early next year. Well, Scholz has become increasingly unpopular as concerns over the country's economy have risen. Today's Big Take looks at why Germany is unraveling just when Europe needs it most. For this, let's go to Bloomberg's Oliver Crook, who joins me from outside the Bundestag in Berlin. So, Ollie, take us through what happens today and how it sets it up for the election.
Yeah, the firing shot was fired just hours actually after Donald Trump was elected president of the United States. Hours after that, Olaf Scholz, the chancellor of Germany, fired his finance minister after basically irreconcilable issues on how to deal with the German budget. Does that sound familiar? Going on in France as well. But it really highlights why this is such an economic story at the heart of the politics here, where that growth is missing. Then you need to make really tough decisions on money, and that becomes very challenging to a point where governing becomes very, very difficult. So Olaf Scholz last week went to the lawmakers, asked for a no confidence vote. That will happen today at 1 p.m. in the building just behind me. He will speak at 1 p.m. for 25 minutes. That will be followed by a 2-hour debate between lawmakers. After that, there will be a roll call vote. We'll have the result from that basically at around 4 p.m. our time, 3 p.m. London. That will pave the way for the election on February the 23rd. And when we look at the polling right now, Francine, it has held more or less steady, with the CDU leading with about 31%. The AfD, the extreme far right here in Germany, is number 2. And then the SPD closing the gap a little bit, Francine, with Scholz getting up a little bit of distance in third place, looking like basically now the only sort of governing option would be between the CDU and the SPD, really grand coalition, a sort of arrangement we've seen many times throughout German history, and certainly under Merkel.
Ollie's backdrop to this campaign is Germany's stagnation. So who's bearing the brunt of it, and how might it play out in the campaign?
Yeah, so it's been a really interesting sort of big take that we put out today that really crunches some of the number, that really sort of fills out this sort of economic picture here in Germany, looking at basically the pre-pandemic trend versus what we actually got, and basically those 5 percentage points of growth that are just basically missing in the German economy and are very unlikely to basically ever come back. And that is really at the heart of these sort of political debates here and sort of how to turn this German economy around. I mean, we got the PMI data out a little bit earlier today. Services just sort of eked back into sort of expansion territory. Manufacturing still deep in the doldrums, 2.5 years of contraction. We're talking about huge volumes of industrial output that have been lost in Germany over the last few years. And that is really at the center of how to turn this economy around. There's a lot of debate about the debt brake, the SPD and the Greens saying that basically the Germany is boxing with its hands tied behind its back when it's trying to compete against the United States, against China, with these sort of very, very strict borrowing limits. But in order to change that, Francine, this is not just a law. It's part of the Constitution that was put in 2009. And the hope was that potentially for many people that the CDU would look at maybe reforming this debt brake, really grasping the severity of the economic situations in front of Germany. But we saw a sort of draft of their platform. It seems that the CDU will really be sticking to their guns. So this is sort of a fundamental key issue. And the question is really, will just tax breaks and cutting bureaucracy really be enough to turn around what is fundamentally an identity crisis for the German economy, and where those engines of growth will be in the future? And that is the question today.
Does anyone, Ollie, have a recipe to fix the economy, or is there a real debate over changing the debt brake?
Yeah, I think that going into the election, you had Friedrich Merz saying things about the debt brake, sort of alluding to the fact that they might consider amending it in order to deal with some of these issues. But again, that seems to have backtracked. All the sort of politicians that I've spoken to over the last few weeks over the CDU have been very, very skeptical of that idea. And again, we saw a sort of draft of their sort of platform for what they're going to be running on in terms of economically for the CDU's platform. And they basically moved away from this idea of potentially reforming the debt brake. And again, this goes to the heart of the situation here. do the politicians grasp the situation to the point, the degree of severity that these businesses are sort of dealing with? I mean, we had the IFO survey out today. Only 1 in 8 companies in Germany across all the sectors expect the economy to improve next year. 56% of them expect it to remain bad or get even worse. That is the situation in Germany, and that is the question of whether or not these politicians have really grasped and are willing to work outside of the box to try to bring things back to life here in Germany.
Thank you so much, Ollie Crook, there with the very latest, of course, on Germany. Coming up, South Korea's impeached president remains defiant. We'll bring you the latest next, and this is Bloomberg. Well, South Korea's Constitutional Court has begun reviewing President Yoon Suk-yeol's impeachment case. If the court agrees on Yoon's removal, a presidential election will be held in 60 days. Now, for more, Bloomberg's Katya Dmitrieva joins us. So, Katya, what exactly is the latest?
Well, a lot's happened in the past 24, 48 hours. Of course, Yoon being impeached, his prime minister has now taken over the daily duties for Yoon and the daily duties as president of South Korea. And it really now comes down to waiting for the Constitutional Court. They first met today, and the first hearing will be December 27th. That's basically to decide whether they agree with lawmakers and Yoon would be impeached, or they don't. And then it's a bit more of an open question. Now, if they agree with lawmakers, as you pointed out, it would trigger an election. And then there's more uncertainty for markets as well as in South Korea, because they would have to produce candidates as well as people going to the polls and voting. So right now, waiting for the Constitutional Court to come back, and it's looking like it probably won't be until early next year at the earliest.
So who could become the next president?
Yeah, it could be the leader of the opposition party. You know, we've been hearing a lot from the leader of the opposition Democratic Party throughout this entire process. He's really someone who's I've seen equated as the Bernie Sanders of South Korea. He's really big on protests, and he's been very vocal throughout this entire process. It certainly won't be the leader of Yoon's party who stepped down today, who stepped down from the party and kind of left that vacuum in his wake. So polls, at least for now, show that the opposition candidate is very likely if there is an election. But again, it's really an open question at this point. You know, this week again, we have the government calling a special extraordinary meeting. That's not the first time that's happened. We had the Bank of Korea and financial minister meeting today to sort of try to steady markets again, because again, it's no longer just the uncertainty from martial law and from, you know, the Constitutional Court with this open question on who's the president. It's now also the economic outlook for South Korea.
So, Katya, how have markets actually been reacting so far?
Well, there was some positivity this morning, right? Monday morning in Hong Kong and in Seoul, we saw the cost be up, we saw the won strengthening, and then it sort of gave back those gains. And it's as markets are really looking to the economy, and particularly something that was noted today about how South Korea is really in the crosshairs of a lot of the tariffs that are coming up under President Trump, basically starting January 20th. You know, he said he's going to impose tariffs on the first day in office. South Korea highly dependent on exports and trade. And so we had a lot of folks in the economic community basically coming out and saying, well, this puts South Korea in the crosshairs and weighs on economic growth going into 2025.
Katya, thanks so much. Katya Dmitrieva there with the very latest, of course, on Seoul. Now, Georgia has selected Mikhail Kavishvili as its next president. That's as protests continue over the government's turn away from the West towards Moscow. Now, Kavishvili is a former footballer and lawmaker for the ruling Georgian Dream Party that won disputed parliamentary elections in October. Well, he was the sole candidate for the largely ceremonial post. Coming up, as European equities set for another year, are they set for another year in Wall Street's shadow? We discuss the outlook next, and this is Bloomberg. Well, European stock bulls looking for the region's equities to close the gap on the U.S. next year are set for disappointment. That's the view of strategists surveyed by Bloomberg. For more, let's bring in Bloomberg senior EMEA equity markets reporter Michael Msika. Michael, there's so much going on, but actually I don't know what it will take for the region in Europe not to trail the U.S.
Well, I think an accident in the U.S. is kind of what people would hope for, to have that. We've got a region which is not doing as well in terms of economic growth, earning growth, and also like participation into the market. Like in the U.S., retail traders are there. In Europe, they don't seem to be there. No one is really interested in the European case. There's too much going on the negative side.
But does that mean that we could see a surprise in Europe, or is that very unlikely?
I mean, yes. Again, the asymmetry of return is pretty good. Let's say it's priced to fail when you have in the US a region which is priced to succeed, and you can see that in the valuation gap, 40% differential. It's the largest it's ever been. In Europe, everyone thinks the politics are making it a mess. The economic growth is sluggish. China is not doing enough. Germany is not doing enough. So, maybe next year, if we have like some positives on that side, that'll be enough to lift it. That's what happens when you have peak pessimism, like everyone is so negative on one region. You have a good surprise, and then it flips the narrative.
But so the good surprise would be economically, or is it enough for Germany to have smooth elections and France to have a prime minister that actually can get the deficit in order?
Well, it's all about perception. Again, is it going to be sorted like in a year time? Probably not. Definitely not, I'd say. But if you have, China willing to do a bit more, they've been showing every month they're willing to do a bit more. First, it was on the industry, then it was on the real estate, now on the consumer. This is very positive for Europe. Everything they do is positive for Europe. And then in Europe, you have a country which, has been very cautious. It's Germany. And if they decide to start, making more investments, putting more money into the economy, that could, change the sentiment towards the region.
Are there any industry? I mean, the problem is also a lot of money is going to private markets, right? So that takes further away, I guess, some of the cash away from European listed equities. Is there an industry group in Europe that you're particularly looking for?
Well, you have very, very, very powerful companies in Europe, in the industrial side, on the renewable side. We've got not so many tech companies, but we've got some. And, these stocks are able to drive money flows into Europe. There's been a lot of pessimism about luxury stocks. They used to be very, very strong ones. And again, they've lost a lot of their mojo, I'd say, and that can come back. Pharma is a big one in Europe. Have a very big exposure. We are quite advanced. There's a lot of investment in that sector. That could be something to look at, especially if next year is really uncertain and we don't know where growth is going to be, what Trump's going to do. There's some more defensive sector that people would be interested in.
Thank you so much, Michael Msika, there, Bloomberg's senior EMEA equity markets reporter. Now, up next, we'll have plenty more on the markets. It's a big week, again, for central banks. We have Fed, we have BOJ, and we have Bank of England. Up next, Bloomberg Brief with Danny Berger and Manus Krani in New York, and this is Bloomberg.